Okay, our first speaker in this stream is Allan Hickford. Allan is the CFO at Ngai Tahu Holdings. It's a position that he has held since March 2009. Prior to this, he was commercial manager at Ngai Tahu and also general manager of property development holdings at Ngai Tahu. His wide-ranging experience at CFO and other senior management positions in both commercial and chartered accounting sectors, along with leading national and provincial sporting teams. Proven leader, building and maintaining high-performance culture through effective relationships, performance management and communications, and fostering a team culture consistent with organisational and team values. To address us now, please welcome from Ngai Tahu, CFO Allan Hickford.
Thanks, Andrew. Sure. Good morning, everybody. Just to echo that message, if you want to come in a wee bit, we'll try and make this a little bit more intimate in the surroundings. It's not perhaps a smaller room might have been a little bit easier. But look, my name's Allan Hickford, as Andrew introduced me, CFO Ngai Tahu Holdings, in that role in my 8th year in that role now, and coming up almost 10 years within the organisation. What I'm going to be talking to you about today is based around portfolio diversification. The title talks about a lesson in diversification. In no way am I sort of trying to put out any sort of lessons in this regard, but what I want to do is take you on a journey of what Ngai Tahu has been going through over the last 20 years, particularly around its commercial developments. We will take the opportunity to look at how we balance risk and look at investments within our portfolio. And then I'll also talk about some of the learnings that we've had through that period of time as well. But as a little bit of a warm-up to the topic, I mean, we've come from digital transformation and all this sort of fast-paced change that's happened. I'm taking you to a topic of portfolio diversification, so it's a wee bit of a shift. But in essence, I've pulled out just a few basic definitions around diversification and what we're looking at here. So the rationale behind diversification being the technique that a portfolio of different kinds of investments will on average yield higher returns and pose a lower risk than any individual investment within the portfolio. Some other definitions we've got in there, but essentially looking to reduce the upside and downside risks that you may have within a portfolio. What I want to do is paint a little bit of context to Ngai Tahu, give you a little bit of background about the organisation. I've just got a couple of slides I'd like to cover on that before we get into some of the component parts of the portfolio. So right at the heart of Ngai Tahu is this 54,000 registered Ngai Tahu whānui. Probably around 20,000 are based in the South Island, a similar number in the North Island, and then we have quite a representation overseas as well. Those 54,000 registered whānui are all attached to 18 papatipu runanga, or marae-based hapu throughout the South Island. I should just explain that with Ngai Tahu, it covers pretty much most of the South Island. There's a small sort of diamond shape at the top of the South Island, Nelson Marlborough, which is not within the Ngai Tahu rohi or takiwa, but it covers 80 to 85% of the South Island. So over the rest of the South Island, we've got 18 different marae based around there. Each of those marae are represented by one tribal representative, and they sit on the tribal council. I'm sure you'll all be familiar with Mark Solomon. He's Ngai Tahu's kai whakahaere and has been in that position for over 20 years. So Mark chairs the tribal council. There are two distinct parts to our organisation. There's the commercial arm, which I'll be talking to you about today, and then there's what we call the Office of Turunanga. Both very important parts of the organisation. When Ngai Tahu first set out many years ago with its strategies, there was a founding document called 2025, which talks about some of the most important aspirations for Ngai Tahu. Protecting the wealth and the financial performance for Ngai Tahu is just one of 9 key aspects that are a focus for Ngai Tahu. The Office of Te Runanga focuses on a whole lot of areas around governance, political relationships, and treaty settlements. And what they do is they manage the wealth of programs that are in place for the benefit of the 54,000 tribal members. With respect to Ngāi Tahu Holdings, I'm the CFO within the Holdings Corporation, which sits over our 5 main subsidiaries. 4 of them are trading. We have Ngāi Tahu Property, Farming, Seafood and Tourism, all active in their own right. Ngāi Tahu Capital has a series of investments, what I'll step through as well. Essentially, Ngāi Tahu Holdings, the board of Ngāi Tahu Holdings, is chaired by Trevor Burt, is put in place by the Tribal Council. And what we have, which is quite unique to our organisation, is for each of our subsidiary companies, we have fully independent subsidiary boards. It's quite a different setup. And one of the unique challenges that I have in my role is that when you start looking at this diagram, you look at the 18 representatives on the Tribal Council, you've got 5 different boards, including Ngāi Tahu Holdings, you quickly get close to 50 governors across our organisation. So it's a structure that we've put in place around 5-6 years ago, and it's been largely successful, but it's an interesting dynamic and, as I said, quite unique. The idea behind it is that we have, for each of these businesses which are of scale, we have sector specialists operating on those directors, on those boards as directors. By the way, happy to take questions as we go through the presentation, so if any questions, sing out. Again, a little bit to context, I wanted to just paint the picture for performance of Ngāi Tahu, the commercial arm over time. If you look at the far end of the start of the scale, basically Ngāi Tahu received 170 million by way of treaty settlement back in 1998. The green bar shows the cumulative distribution that's been paid out from the commercial arm into the distribution arm of the organisation. As you'll note, the cumulative distributions, which is up over 300 million now, is actually in excess of the settlement monies that have been received, the initial settlement monies received. And what we've been able to do is significantly grow the equity of the group to a point now that 1.2 billion of market value of equity. The dark blue bars are just representing the fact that we have sort of followed market value assessments over the last 5-6 years to get a true gauge of performance. So over sort of a period of 20 years, significant growth and success for the organisation. I wanted to take time to talk to some of the journey that we've been on for the group. It all sort of started with Ngāi Tahu Property. With $170 million of settlement monies received, there was an option to procure a number of Crown properties throughout the South Island through a deferred selection process. So that was the sort of the very beginning of Ngāi Tahu. There were investments made in purchasing certain police stations and courthouses throughout the South Island. Shortly after that time, there was an investment made which to date has been the single best investment made in the portfolio, and that was as a cornerstone investor, 25% pre-IPO in Ryman Healthcare, which today is a phenomenally successful company. We still own a significant share of the company, but probably with property and the investment in Ryman Healthcare, a couple of the key aspects that have been made. In 2005, there was the purchase of the Shotover Group, which was really the genesis of the Ngāi Tahu tourism arm, which has now grown today to a significant business in its own right. You'll be cognizant of Shotover Jet, other tourism activities within that portfolio, the Agrodome business, which has been hugely successful, based in Rotorua. We've got the businesses at Franz Joseph and the glaciers, and also the glacier hot pools there. Also from the settlement, and I guess it's great that Ngāi Tahu has had such a nice platform to sort of start from, is a significant amount of seafood quota as well. So with Ngāi Tahu Seafood, there's 2 million bluff oysters that are sold annually. I suspect a lot of them will be consumed in Auckland this week or in the coming weeks, perhaps down at Solbar. But 500,000 live lobster exported to China, 17 million kilograms of fish annual catch entitlement under management. So again, a significant business. Sort of half that business evolved through settlement, and there's around about $70 to $80 million of new seafood quota that's been purchased over time. And Ngāi Tahu Farming, which is the newest of our subsidiaries, is a business which has evolved out of Ngāi Tahu property. There's some significant land holdings that we have in the North Canterbury area, in Balmoral and in Irwell, and also on the west coast as well, around 52,000 hectares. There's been a lot of activity with conversion from forestry land to dairy platforms over the last 4 or 5 years, to the point now where we have got 7 fully operational dairy farms and 5 support farms. Wanted to give you a little bit of an insight, and there's a few slides so you've got some takeaways to see some of the aspects we concentrate within Ngāi Tahu. So when we look across our entire portfolio, there is a significant focus for us on growth. 55% of our capital we're targeting at private equity direct investments. The big focus on our operating businesses and in businesses that have got significant tailwinds. In balancing our risk across the portfolio, and I think it's fair to say everyone will have different sort of cards to play with, is that with the long-term intergenerational approach Ngāi Tahu has got, it actually has got the ability to take some risk, particularly with the portfolio it sits in today. Ironically, when I look back to some of the initial investments made within Ngāi Tahu, the investment in Ryman was hugely risky. So there's an element of taking risk at times. I recall a story from Sid Ashton, who was the chap who was responsible for the initial investment. I think it was around $7.5 million at the time. It was invested in before even the settlement monies had been received by Ngāi Tahu. They borrowed the money from the bank to actually get involved in that investment. Gutsy decision at the time, which has proved great dividends. So what I'll get to in time is there is a balance of, there's a perspective of Ngāi Tahu with a long-term outlook where we are prepared to take some risk. Balancing that growth, the focus that we have is also a big focus on cash flow. So we target around 30% of our capital in this space. There's certain assets with the attributes of cash flow provided from them. Investment property is one of them. So we've got around 300 million of investment property throughout the South Island, particularly in Christchurch, in Queenstown and in Dunedin. So within Christchurch, we have a 50-50 joint venture with the Christchurch City Council with the Civic Building. We have a number of other significant property investments in Christchurch. In Queenstown, the Post Office Precinct, which some of you may be aware of down there, is one of the prime developments there. So that investment property, we've got around half and half with respect to Crown tenants or local government tenants versus other tenancies. Again, a spread of risk in there, but it's a key part of our portfolio which provides cash flow to the organisation. Fish quota, what we've done in seafood is we're looking to operate in areas where we've got scale. So when you look at the crayfish market, for example, and the quota that we own, the crayfish exported to China, we have sufficient scale to actually operate and be in that market. There's a big chunk of quota that Ngāi Tahu owns where we actually don't look to operate. We will lease that out on an annual basis and try to get the best return on that investment. Typically that could still return 8% by way of return, but that's another part of our portfolio makeup which adds cash flow into the mix. The last part of the puzzle which we target with 15% of capital is around liquidity. So essentially around the way we manage our central treasury, but also certain investments that we've made in recent years in international equities, which is obviously a very liquid market. So it's a balanced approach that we have across our portfolio in the different sectors we operate, and I'll talk to you a little bit more about some of the mechanics behind it. So although the portfolio has evolved over the last 20 years, It's probably in the last 5 to 7 years that we've started to really focus more in on the balance of the portfolio. In 2010, an investment policy framework was developed and brought into the organisation. It was based, well, I call it a hybrid really of a Yale endowment fund with the competitive advantages that Ngāi Tahu had in certain aspects, or the legacy assets we had as well. So it was a bit of a balance. And if you look across that, you'll see some of the predominant areas: cash, fixed interest, listed equities, private equity, development property, investment property and infrastructure, our rural assets, and seafood quota. It's been cut and diced in a way to fit, well, not to fit, but from our perspective, take development property, for example. It's been a fantastically successful arm for Ngāi Tahu over many years. A business that Tony Sewell has sort of grown from nothing to sort of $400-500 million over his period of time with the organisation. Development property, we're still keeping a lid on it as far as, we're happy with 10% of our portfolio being in that space. We've looked through the post-earthquake period to take advantage of demand opportunities in Christchurch to sort of scale up around development. Although it's been a really hugely successful part of the organisation, we're still looking to operate within the parameters. So I should explain, it's the grey bars on the graph reflect the bands that are applicable for each of the asset areas, and the actual coloured band represents where we sit on those. So to explain, listed equities, we're sort of well under in that sort of space. If you look at our rural assets and the investment that we've been doing in recent years, actually got to a position of being overweight consciously in that regard, because we're looking to unlock margins that we've got there, but it's going to mean we're going to be looking to partner up with others in due course in that space. On the pie chart, just a little bit more flavour to the sort of the rough holdings that we have across our portfolio. So the Ryman, quite a big chunk at 17%, rural property 22%, investment property, which also covers our infrastructure investment class, we're happy at 20%, and as I said, development sort of fluctuates up and down. But we've been really focusing on some of these other private equity space areas. Seafood, tourism have been excellent performers. Tourism has been experiencing fantastic growth in recent times. But it's been these investments that we've done of late into GoBus and one or two other investments that we've been successful in as well, which is continuing to shape our portfolio. I want to touch next on just some of the learnings that we've had through this period of time. And I do stress, look, this is a fit for our portfolio, and obviously not an exact fit for anywhere else, but our ethos is to spread our investments to reduce overall risk. So you can see from our investment policy framework, the strategic asset allocations that are there, it's quite structured in the way we go about looking at new opportunities and manage different aspects of the portfolio. As part of the investment policy framework and the strategic asset allocations developed up, importantly within that document, there's a distribution rule or a dividend rule that was developed. So within our organisation, we have a rule that 4% of the market value of equity of the commercial organisation is the distribution to the program arm of the iwi. So there is it's not like it's an annual tennis match as to what that distribution dividend is going to be. It's set in stone, has been like that for many years now. And it really has set in place a discipline and a focus too on the sort of return profile we're seeking across the portfolio. 4% cash every year is going to be going out. We know that. What we do know is if we can continue to perform as we have in the past, there will be significant capital available to continue to reinvest across the portfolio and into new investments as well. Within Ngāi Tahu Holdings, the team I work in is a relatively small team. For that reason, and others, we target a small number of strong or meaningful or scalable businesses. we just, it goes to the next point, not interested in spreading ourselves too thin and trying to get too clever in that regard. There's certain investments we've made in recent years. The Go Bus investment was an excellent investment, which is progressing well. That's a co-investment with Tainui. Ngāi Tahu owns 2/3 of Go Bus, which is a passenger transport operation throughout the country, and actually just had some success with Auckland tenders as well. So scalable businesses, and when you go back to the pie chart earlier, you look at the seafood arm or the tourism arm or even the farming aspects, they're all significant in their own right. You know, we've got capability by way of management, we've got independent governance in place over each of these areas, and it's a formula that has been working for us. What we're finding or learning is with some of these new investments is about partnering, and that's a journey we're on at the moment. And there's a lot of work that goes into things when we're looking at an investment as to the partners we will be looking to operate with. Tainui and Ngāi Tahu are a bit of a natural fit in that regard with respect to long-term outlook. But it's a really key aspect we consider when we're looking to co-invest and leverage off the expertise that was already within the business. It's easy, and I guess in our portfolio where we've been pretty well under leveraged for a lot of the journey. I mean, by way of funds coming into the organisation, Ngāi Tahu and Tainui have benefited from relativity monies coming in at different times. We have maintained a discipline to divest, and I think what we've found is we have got these subsidiaries with independent subsidiary boards. The challenge for holdings management and also the holdings board is to try and manage that whole portfolio as a one business, and that is actually a significant challenge across our organisation. Discipline to divest is a part of strategy. It's something we're pushing down, and we have got examples of that have happened, which is all for what we believe the greater good of the portfolio. In saying that, we're still conscious and wanting to leverage the established benefits that Ngāi Tahu has got as its platform. The right of first refusal to purchase Crown property through to 2044 is something that has benefited the tribe over time. That gives Ngāi Tahu the right to purchase Crown property at market value. So it is at market value. It's not at any sort of discount to market or anything like that. It's assessed at market at the time, and obviously as part of our due diligence we'll be looking as to whether we want to pick up a property, whether we're looking to invest or develop that piece of property. But consciously playing to our strengths that we've developed, and in particularly the capability that we've developed over time in each of the different areas, and particularly in property, in seafood, and building very much so in tourism. We learn about discipline for long-term returns. So we go back to GFC times, we continue to challenge ourselves around investment. So actually in tourism through that period, there are a couple of investments that had been made in the Rotorua region. One investment was the purchase of the Agrodome business, which has been hugely successful, particularly with the growth in Asian tourism. But we've also invested in existing assets within our portfolio up there as well. So that discipline to continue to look for the long term is something that we've focused on. I briefly mentioned it earlier around going deeper when opportunities exist. If you think back to the investment policy framework, the bans on the strategic asset allocations, we're certainly conscious that we're certainly interested in tweaking investments within that band. Well, I guess the rural assets one is a little bit of an anomaly, although we have plans around that, but we're up for investment when the opportunity is there within the guidelines that we have. So as with what happened in Christchurch post the earthquakes, we were sitting on significant parcels of land at Wigram Skies, Preston's in the northeast, and also out in Lincoln as well. it was, we were well placed to take advantage of the demand that was there post-earthquake. So a lot of accelerated development, we're talking tens and hundreds of millions of investment, and we've certainly seen the dividends from that investment through that time. In our portfolio, there's sort of, I guess, a number of approaches you could take to some treasury management. What we've found that works best is to manage treasury at a central level within our holding company, essentially looking to utilise the cash flows and the asset characteristics from across our portfolio to obtain the best financing arrangements that we can obtain for the group. We've focused on that over time, and I think some of the Westpac guys in the front row can probably attest to it. It's been a good approach to that. What we do within our group, though, within holdings, is we actually operate as a bank to each of our subsidiaries. So what we have put in place is industry-specific banking covenants in place for our tourism business, seafood, property, and the like. So the boards that are operating in that area, they have their full balance sheet to manage, and the covenants that they're operating within. So again, that's to put the discipline in their disciplines required for each of those businesses. So we've found that using those cash flows from across the group really useful to get our lower cost of debt. With our diverse portfolio, we've seen, particularly within Ngai Tahu property, has been an incubator for new opportunities which come along. Sometimes they might leverage off a right of first refusal opportunity, which might not be totally property related, but what we have seen is with the capability that we've built within our organisation, that new opportunities don't just come by way of new investments we're getting into, but they're incubated out of some of our own subsidiaries. What we have done, and particularly with Ngai Tahu farming, as I've shown, is when it gets to a meaningful, scalable level, we've separated it out. We've now got Ngai Tahu farming, it's got its own chief executive, its own management team, its own independent board. So when we get to that point of scalability, of size and purpose, we take it seriously in that regard. One of the key things I think has been for us is actually getting an investment policy framework put in place. And you can imagine it could be a topic you could dance around for a long time around, what asset allocations you're going to have and that sort of thing. I'd encourage you, if you don't have something in place, is to actually make a start on that in that regard. As I said, we made a start back in 2009. We had some independents get involved. Sandy Mayer, who's actually on the board of Ngai Tahu Holdings, was part of a team that started to put it together. So having a policy framework, which we've actually gone back to and reviewed every couple of years, has been a really good starting point for us. It provides us with a discipline to report back to and a focus with our direction, particularly for new investments and the like. Consistent reporting that we're providing year on year within our organisation to our stakeholders, and we go through a thorough annual review process, which is, we're not talking the financial statements, but an annual review, market review of all of our assets. One of those reasons is to assess what the distribution will be. It's based on the market value of equity. It's been useful to have that discipline of an annual review and reporting transparently up to our shareholders in a way that's understandable. So some of the benefits and risks that or some of the learnings we've had through the time, I wanted to just touch briefly on opportunity identification. We've spent probably a lot of time in recent years around identification strategies of new opportunities, around networks and incubation of opportunities as well. One of the strategies we've had around identification is we've invested in private equity funds in New Zealand and in Australia in recent years. Part of it is deploying capital, right, for use and for return. The bigger part of that strategy was around us getting an understanding of the opportunities in the marketplace and providing us with an opportunity to perhaps co-invest, be it with private equity alongside, if it fits with our portfolio, or getting alongside other partners who are looking to invest as well. So it's been a really interesting learning. Off the back of that, we've had a three-way joint venture with Waikato Milking Systems, which Tahu and Ngai Tahu are involved in, but also Pioneer Capital. We've got to know Next Capital fairly well and PEP in Australia. So Next Capital, they sold GoBust, and essentially that came into Ngai Tahu and Tahu ownership after that. The last one I've got mentioned right down the bottom, sorry to jump down, is a recent investment just before Christmas in late November, was an investment into the Manuka honey space, which is a really interesting sector. I'm sure it probably crosses a number of your paths with advisors in the room, but really competitive space. There's probably three major players in that space with Comvita, Manuka Health, and Watson & Son, which for us is a 50-50 co-investment with a family business which has developed over many, many years. So it's another example of some of the investment movement that we've done in recent times. We've got another one on the go at the moment as well. But around opportunity identification, we've really done quite a lot of thinking around understanding not just our capital availability, you've got to do the work on that, but our fit within the portfolio, going back to that slide around our appetite for growth, but balanced by cash flow and liquidity. Our investment filter, when you put it down in a few bullet points, is relatively straightforward, but actually took us a while to get to. Partnering up, obviously important. Established businesses, we're not really going near startups. But around the equity check of $50 million plus, or maybe slightly less if there's strong near-term opportunities, it's taken us a wee bit of time to really focus on the size of the check that we want to, the playing field we want to be in. And noticeably that's sort of up above where a lot of New Zealand private equity funds will be focusing on. A lot of them might be in the sort of 10, 15 million sort of space. When you look at us, we're a little bit further up. So we're trying to differentiate a wee bit, but it also talks back to the fact that it's a balance of risk as well. Looking for businesses that are established, but businesses of some significance and scale as well. The last slide just talks to just some of the internal, external opportunities that we've had. And I won't talk to that, but it's included in the information. What I might do at this point is just pause and take any questions.
Thanks, Alan. Are there questions for Alan at the moment? I'll fire one. Alan, how do you decide when to divest? Because the Ryman one was an interesting one. Clearly, it's a market that still has a lot of growth potential. But was that a case of just grabbing some profit while it was there?
Well, there's been a number of sell downs over the years. I think of significant sell downs, probably 7 or 8 over a decade. That's interesting. You could argue, well, we could be a quarter share owner of Ryman today, and that investment alone would be worth $1 billion to us. So at points through our life cycle, we're certainly taking the opportunity to rebalance in our portfolio. It's actually something we've done again fairly recently, is to rebalance, because for us to have 17% of our portfolio tied up in one stock, it's obviously experienced amazing growth in recent years. But we are continuing to challenge rebalancing that so we can look to invest in other aspects of the portfolio.
How much was Ryman responsible for what has been a very impressive capital growth metric?
It's a big chunk of it, yeah. I'm quite open around that, because you've got Ryman and the success with property. Some of the conversions we've done from forestry land have seen fantastic development margin uplift, but I know that Ryman in itself has added north of $300 million in value to the portfolio. So it's probably a story that's not told enough around the success of Ngai Tahu.
Every year we would like one of those when they're starting off.
Absolutely.
And just finally, when you're thinking around business acquisition, and I imagine you must get a lot of approaches. What are you looking for? What's really core? And I guess in terms of that risk idea, I see you won't do anything in the startup space, for instance.
Yeah.
So what are some of the mandatories for you that you look for in
Yeah.
terms of risk mitigation, I guess?
Yeah, well, we've certainly looked at, and there's been a number of investments as I talked to Go. Bus was a completely new sector that we've gone into. Again, one of the bigger operators in that space had significant opportunities because it's actually one of the bigger operators in the country, but it's not in the Auckland or Wellington urban markets. So we saw that fantastic opportunity, the capability of the management team that involved, the continuity of some shareholders going through that investment as well. But it's different for each investment. So GoBus was one where I couldn't speak more highly enough of the capability of the management team there. If you liken that to the Watson & Son investment we've just entered into, well, we've actually had to go a completely different approach there. We've got a new chief executive and new CFO. It was a family business built up, just didn't have the infrastructure or even the governance required. So we'll all have a look at them. There's obviously the different risk profiles with each one. We're coming back to wanting to have a meaningful investment in certain sectors that we like the look of. So the outlook for a sector is hugely important for the way we invest.
Very good. We're right on time. So, Allan, thank you very much. Allan Hickford.